If you're retired or planning on it, stop what you're doing and listen closely. The strategy Wall Street has called safe for decades is collapsing right now, and millions of Americans may be left paying the price. Now let me ask you, would you use a phone built in the 1950s to make a call today? Of course not. Yet many retirement savers are relying on a strategy built in that same era, the 60-40 portfolio. Not only is it outdated, it's dangerous. Let's find out why. Before we begin, remember to like this video and subscribe for more economic updates. The new inflation numbers are still running hotter than the Fed's target. The Federal Reserve is already signaling rate cuts, even while prices remain elevated. Meanwhile, Washington continues to pile on spending, pushing U.S. debt past $37 trillion. And the world has noticed, for the first time since 1996, gold represents a bigger share of foreign central banks' reserves than U.S. Treasuries. For decades, Wall Street has pushed retirees into the same formula: 60% stocks, 40% bonds. They said it was safe. They said it was diversified. But in 2022, both sides of that formula collapsed. The S&P 500 dropped more than 19%, while core bonds had their worst year on record, down around 13%. And if you held long-term treasuries, losses were closer to 30%. Retirees who trusted the old playbook took years just to break even. BlackRock CEO Larry Fink admits the 60-40 portfolio no longer represents true diversification. Hedgeye has declared the 60-40 portfolio is dead, and strategists at Bank of America and Bridgewater now recommend adding commodities and gold to modern portfolios. When Wall Street says the strategy doesn't work anymore, believe them. They've moved on years ago and shifted their strategy into commodities, including gold. Meanwhile, retirees are funneled into the same old playbook. Why? Because the system is built that way. Washington weakens the dollar with unlimited spending, while Wall Street locks in endless fees regardless of how you perform. They win either way. Retirees lose. Retirees risk outliving their money because outdated strategies can't hedge inflation. They're worried they won't have enough to live on after they retire. They're told they're diversified, but in reality, they're exposed twice to the same risks in stocks and bonds. Meanwhile, the people who know better, they're loading up on gold and silver, two of the strongest performing assets this year. That's not a coincidence, it's a signal. We're living in a new era: persistent inflation, soaring debt, and a world that doesn't trust U.S. Treasuries the way they once did. The old strategies weren't built for this new reality, and if you don't adapt, you're the one who pays the price, not Wall Street. You've worked too hard and for too long to allow outdated strategies and endless fees to dictate your future. That's why Augusta Precious Metals exists, because you deserve better than an old broken playbook.
Sign up for your one-on-one web conference with Augusta Precious Metals today. No commissions, no pressure, just education. Click the link in the description to learn more.